Good morning, guys. I'm going to make a quick video today because basically there is not that much to say. It's just to be very, very careful because of the skew. We're really, really skewed on the Euro USD and also on the Pound USD as well. You can see a lot of skew on a lot of currency pairs, but because we're trading the dollar on our robot, we have to be really, really careful. There's a big tug of war going on right now, and there's going to be a sudden reaction from the battle. So you think about it, there has to be a give and take, to and fro, back and forth motion, and currently there's going to be no one else left to destroy on the Euro USD. So we're going to see a quick snap back on price action because of the skew. Likewise with the indices as well. So I'll quickly tell you about the risk calc, because that we are risk on the big picture. They have sold over the 24 hours. The technicals are very strong, but we have to remember the bears are gonna probably have to give up. And so I'll show you the market scope, and I can show you the skew. So gold's fine because we took the stop loss cluster out, as I said in Discord. It was actually 1964, but they probably brought their stops a little bit higher. And well, actually I said 1962. But they moved their stops higher, so it probably was about 1964, 1965. So therefore there's that reaction there, and you know, they'd sold it here, so there's that reaction, which is a sufficient move from them selling. To be honest, that would be a sufficient move to punish those guys who sold there. Now I just want to talk about the skew, and this is why this video is going to be quite short, because of the nature of the sentiment. You think about a tug of war, there's going to have to be some reprieve from that battle, and if we carry on going sideways, then it's just going to chop and we'll go sideways on price action. But at the moment, you know, they'll sell or buy, we'll see that reaction on the tug of war, and it won't take much for them. If they start buying up here, then we'll see a big move on the sentiment, and that's going to impact the USD, and it's going to impact our robot. So it's all eyes on the indices, basically. US 30, and you know, they sold it here, so there's that reaction, and they might sell it again, to be fair, or they might go long. But if they do, then we're going to see price action respond to the sentiment there. Very, very, very skewed. And if we zoom out, you know, they'd sold here, so you know, what a move. We could potentially we could move higher. You just got to be careful. That's US 500, US 30, and DAX. So this is a really quick video today, because just to basically just say, just be careful, and especially with the risk. And our robot is based on the USD, and because of that we did encounter some losses over Asia, which I think would be normal, because the conditions aren't correct for the robot. But it's trading the dollar. The dollar's reflective of risk appetite, and the indices are very skewed on their risk appetite. So not only you've got skew on the currencies, but you've got skew on the indices as well. And you saw that the correlations broke down as well on Discord in the US yields. VIX fell, but then so did the 10-year yield, and so did the dollar. So that's completely broken. And so, you know, we're going to probably have to see a reaction this week. The bears are going to have to give up, basically, and they're going to have to give up on that tug of war. Once they completely give up, then we'll return to some, you know, light normality on the sentiment. We're very skewed. So there's your buy opportunity there when we went in to buy, and there's your launch from that point on. Right, so there's the buy set up, the crossover, we had that reaction, that was slightly naughty, and up we come, boom. Okay, and so yeah, basically we've got some NU trades running, currently okay, which is a decent surprise, to be fair. And we'll just keep this as it is. And I think what the situation would be is that the logic's fine on the robot, but the environmental conditions aren't. And so we're going to probably have to just persist and clench our teeth and just hold on, and then we'll just see how we go, because the logic's okay, we're using sentiment, but the conditions are just horrible for the bar. So this is a nice surprise, to be fair. And the trading stop just kicked in, which is cool. And that's that. And don't forget, lastly, is the FX SSI indicators. And it's great because stop loss clusters will give you your targets, and you stay on the right side of the ratios and you should be fine. And of course with this you'll need to know your stop loss and TP, and it supplements your system. You wouldn't just use it on its own. You'd have like a decent system where you're using supply and demand, or using some zigzags, or using pitchforks, or some technical analysis that you're using. But this is the layer, like a layer on the cake, like the icing on the cake, and it's the best sentiment indicators you can get in existence. So we've got a QDB code. You've got a lifetime deal, a huge discount, and the QDB code gives you an extra 10% discount. So have a think about it. It's pretty much essential in my opinion. But at the moment, for manual trading, you'd want to be really careful on the USD, and you'd want to be really careful on your indices. So it might be worth trading something that's not directly has a direct relationship to the USD. You might be better off to trade the Aussie New Zealand dollar, or potentially something like the pound Swiss or the pound CAD or something, just so it's not directly impacted the dollar, because we're very skewed on the dollar itself and very skewed on the indices as well. And that's just a quick look at the QDB scores, and you can see how the dollar is actually quite weak on the technicals. But like I say, they're going to have to give up inevitably, and if risk appetite sours at the FOMC later, then the dollar is probably going to strengthen. So just be very careful. Know your SLTP. We've got a great discount to do that, and just to be very, very careful, and maybe trade something that isn't directly impacted with the USD. So remember to trade safely, and I'll speak to you guys soon. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxsi.com, and enjoy your day.